Okay, good evening. It's Friday, December 12th, and we're going to mark up key levels on GME, GameStop. So, this is a technique that I've been using where on the 3-day time frame, I'm utilizing this idea of I want to get the top 20% of wicks engulfed with these blocks, and as we build the picture you'll see that areas start to overlap, which will form the key levels, and then we'll use the VRVP tool to confirm those key levels. Doesn't really look like much right now, but hopefully more pops up. And then we'll also use AI to see how many, once we see how many key levels we generate off of the first run, we will ask AI, hey, what are the key levels that match the same amount of key levels that we've produced, just to see if we can get them close. And then the reason I'm doing that instead of just going with the VRVP, the volume profile, or asking AI directly is because I want to build trust in my own system, this analog system. And if I need to tweak, there's always room to tweak. So one of the features that I like to just add is that this is on a 3-month time frame. Today is 12 December, and this technique, I'm calling it the wick engulfing block, just because I engulf the wicks. Alright, I'm shooting to keep this under 10 minutes, and I think we're probably around 2 or 3 minutes now, so let me get back to it. So in these extreme cases, we'll take the whole thing, but generally every 5, 1, 2, 3, 4, 5, I'm looking to take the top 20%, or if we see an area of more than that, like here, 1, 2, 3, 4, 5, 6. I usually don't include the active wick. So we have this overlapping area starting to develop, which is showing us it's definitely a strong area. About 50% I'll take, because I do use fibs. Take this second high wick down to there. Let's 1, 2, okay, 1, 2. And even though I like to do groupings of 5, sometimes these extreme wicks, I'll go ahead and do a smaller wick to see if we get any kind of additional overlap. So not necessarily, but this area now is just a little shrunken because of that. So key level would definitely go there. And so I do the top sides of a lot of, and any little moves like this, if it's really kind of a high-low structure point that is fairly defined, I'll include. So in this case, I'll take this first wick. You can see another triple overlap. I really like the triple overlaps. They're just stronger. I like to try to do things in 3s. So now we'll do the bottom side. Here. Here. 1, 2, 3, 4, 5. That's the first one. We'll take one more since it's a little bit long. Grouping of 2, there's 3, but you can see there's already a key level up there, so we don't need to go all the way up to this wick. It will make the triple overlap, but it's such a large distance, I don't really think again, it's kind of sunken back. Okay, so there's these moments where this kind of thing happens, and this extremely thin gap, I like to include those as, so there's gaps like this, or voids, and sometimes they actually play out as key levels, but all of these edges of these rectangles generally are going to be key points. You can obviously look at the candles, see if they respect those areas, bounce within them. It's great for analysis and just getting that overall picture of what's the flow, what's the story. Include this one, take one more. Don't want that one. Pretty smooth up the way. This one. Okay, it's kind of large. It's really providing anything. I don't know, maybe on the 1 month time frame. So on this I've got, okay, so in this I'm using one color for the 3 month, and then when I switch over to the 1 month, go ahead and resize the chart. So generally here now, I don't necessarily want to go back as far. Go ahead and change that to orangey color. But sometimes it helps, especially if there's large gaps in the field. Like for example, let's just say that we called this a key level and this a key level. Looking at the chart, you know, there's something going on over here where there's kind of a level, which as you can see, if you go move to the right, it's pretty much 50% between this zone and this zone right there. So we'll be looking out for these types of patterns and not setups, but just these kind of coincidences. Not coincidences, alignments. Okay, so now what we're kind of doing is we're looking for filling some of those gaps because we have a little bit more fidelity. Right, go on the 1 month, 12 December, web. Here's a nice one, just to kind of further define a key area. Yeah, I definitely like that. I've been recording for about 10 minutes. Alright guys, try to wrap this up, keep it under 20. I was shooting for 10, but probably talking too much. Not a good multitasker. Okay, so here's an interesting thing. See here, we've got tons of wicks that are about the same size. 1, 2, 3. I'll call that 4, 5, 6, 7, 8, even 9, 10, 11, 12. But since they're all bunched up so nicely, I'm going to take this just up. That's quite nice. Just kind of confirming, I would say. Yeah, this one's kind of tough because historically it's been right in the middle. So we probably want to go up 1, 2. Big key level for this area, especially if this is the next one down, or this is the next one down. 1, 2, 3 wicks. Okay. It's about the same. Overlap. I'm gonna fill this gap. So this gap is definitely key. So in 1, 2, 3, 4, 5. So we take this one. Up. So this is a case where this one I'll do kind of like this right here. Okay, all this kind of mess to identify this. I think it's worth it. I'll leave that for now. This price is kind of in this zone. I'm not going to do too much outside of that zone. Maybe look a little further back. Look here. What's this? That's kind of in that 50% zone as well. So. So I'll stop here on the 1 and 3 month time frame. Take a horizontal line, place the first one down. Sometimes I'll super bold like that if I feel that I'm seeing a point of control or a POC line, which we'll look at on the 2-week chart. Call this key level. And then I'm on a Mac, so I'm going to press Command. I'm going to select the item, Command, and you can basically copy it up. So say this could be a key level here, but we'll go with the overlaps. I like them better. That overlap. That overlap. I could have 2 levels here, in which case POC, I feel like POC is more like in the middle, based on this, and this 50%, and this void, I mean, that seems more POC-ish to me. We'll see, we'll test it. Okay, I'm gonna jump to, you see there's a gap here. That could be something. It's a bit messy over here, but again, that's like 3 years ago. So we'll leave it for now. This one. I've got this sliver. Alright, and we'll take this one. And then for these huge blocks, sometimes I'll just default kind of 50. I use the GAN box, kind of customized it for entries, stops, etc. So like the 0 line is here, so I'll show you how I use it shortly. Right now I'm looking for the 50%. Right there. And I don't know if Gmail will ever get up here. Yeah, it's looking good. Okay. So now we're moving to the 2 week. I'm not going to do any web blocks here, but I am going to expand this open. Well, let's look at on the 2 week chart. We're going to turn on the VR, the volume profile. And okay, that's looking a little harsh. Let's get rid of some of those huge ass candles. 30%. So on the 2 week, you can see that the POC is this white line, and that's pretty solid. So GameStop's at the POC right now. So depending on momentum, it could be, heading down or probably heading up. Here's the first area I'd be trading up to, first area I'd be trading down to. Generally, just glancing. Of course, we need to look at our momentum indicators. And then we'll also open a tab. This is for GameStop. Ask Grok. How many key levels did we have there? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Okay, generally I like to keep 6 to 10 key levels. That way I know that there are kind of rare moments where a strong momentum should happen up or down. So if you look at the POC, you can see it dip down, hit this key level, and rocketed up. At this key level, it seems to be quite strong. Maybe I'll thicken it up a little bit. Just 2, not 3. And then we're trading here. Okay, so I think we had 13 key levels, and AI usually will add a low and a high. So we'll say 15 strongest key levels for GameStop, GME stock. And let's look back. 2 week goes back to 2020, 2021. Crazy. So we go just for a little bit, since that's so wild. We'll do 2022 starting here, because this is like the area that we're in the last 3 years. And again, 3 is a strong number. 15 strongest key levels for GameStop since 2022. And I'll say in 50 words. Insane. It's going to be in a grid. Alright, so it's pumping those out. And right now we're at 21. So we're at 21. So it looks like it's just jumping, $6, $2, 2, 2, 2, 2, 2. So this whole $20 range, very strong. 1, 2, 3, 4, 5. Then you got, let's see, so from 20 to 30, there's like 5. It's here, 20. So the bottom of this box, it likes. And then maybe just leave it. 20, 21, there's 22. It's a little, I'd rather probably miss some of those if it's not hitting this key level. Because I'm going to stop at race and look at that. Maybe if options, if I had that, an options entry, because they like spool so strangely. And then 24, 23, POC, 24. It's 25. It's just $1. 2 years ago, yeah, it was good. It's good in there. Weeks, couple months. Very choppy. Alright, and then 36, 48, 64. 36. I don't have anything up here but top of this block. 36. But it doesn't look that great, but so since I haven't maybe if I grabbed that one, this is a 2 week. I don't think I'm going to be trading up there. Let's look down, because that's really where the targets will be. Sub 20, so you got 20, 18, 12, I think we saw 11, and then 10, so that's perfect. 20, 18, it's probably pretty, could be a strong area. There's 12, and there's 10. So, as you can see, this is a great check, and if you just wanted to use these, so be it. And eventually I'd like to switch to that in order to just make this whole process quicker. As you can see, it's been about 20 minutes. So with these two checks, and so now that we're zoomed in a bit more and the volume profile doesn't look so messed up, typically what I've seen on a lot of stocks is when this dips in here, that's the area that you want to be looking at. But this is a pretty prime zone, and it doesn't necessarily suggest that here. I don't want to go too much further down than the 2 week because you start losing some fidelity. But this would be my key levels, and I have removed the blocks in the back before, but because so many of these edges are quite important, or can be quite important, like we added 1 or 2, I keep them. And then from here, we will use momentum oscillators. I've kind of colored them up just to be fun, sort of Ghostbuster theme, but we can start looking at the momentum, and then I'll show you my trade journal where I document my trades, and if there's something, we'll put it. But what's probably most important is this is the 2 week chart. I'll give a grade of the momentum reading, strong or short to long, using the score of 3, 4, 5, or 6. I don't know why, just kind of random numbers that I finally was like, I'm done changing it. And it makes me kind of think a little harder, like, okay, 3 is short, 4 is sort of 3 is like a strong short, 4 is short, 5 is long, and 6 is a strong long. And then it averages those two for the 2 week and 2 day. So they have a strong trending reading, and then I'll look at the 8-hour and ideally want it to be trending. And then I'll write down how much I'm willing to lose, and I'll mention if it's limited, if it's active, or if no trade was taken. And then over here, stop, entry, take profit, and then realized P&L. And then I have some stats up the top. And this goes back to September 14th, which is kind of my awakening, I guess, where I really got serious and created this thing. Alright, so for now, I'll leave it there. In the next video, I will go over the momentum so it's just not running forever. Thanks very much.